Happy Monday, traders. Thanks for joining me this morning. It is Monday, the 22nd of September, 2025. It's 8:01 a.m. Chicago time. This is episode number 2689. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Also, a reminder that all the information that I provide here is for educational purposes only. They're not recommendations to trade. Okay? Do your own due diligence. Let's kick it in with the convergent trading pre-market summary sheet here. Mild risk off. Big news over the weekend. President Trump signed an executive order that would impose a $100,000 fee on H-1B visa applicants who would charge the companies that would sponsor them. H-1Bs are visas for people that are sponsored to come in and work, usually in a professional setting. A lot of these have gone to software engineer type positions. There was a lot of confusion on the signing of the executive order because we knew that the fee was $100,000. The existing fee is like $216 to apply for this visa, for an employer to apply for this visa. And during the signing, the fee of $100,000 was revealed, and then Secretary of Commerce came out and said $100,000 a year is the fee, which would be a massive risk to the Mag 7 stocks, which eat up a lot of these visas. So there was absolute chaos over the weekend when it came to people flying back to the U.S. The deadline was looming, and Google had sent out a message telling all people who are thinking of leaving the country because of this fee to stay put while they clarified, and then anybody that was outside of the country was told to return as soon as possible. So flights were delayed and all kinds of stuff as a result of this surprise announcement. So later on, I think Saturday, it was clarified that the fee was a one-time fee every time an employer applies for new H-1B. So this is putting a fair bit of weight on the techs. So you're seeing Microsoft down 59 basis points, NVIDIA down about 50 basis points, Amazon 33 basis points, Alphabet down 62 basis points, pulling basically the NASDAQ down. Surprisingly, Apple's up about 1%. So that's the big thing that came out. Another surprise announcement. There was really no layup or setup for this. U.S. President Trump said he agreed with President Xi. They would meet at the APEC summit in South Korea. He also said that Lachlan Murdoch, Larry Ellison, and Michael Dell would be involved as investors in the proposed deal to keep TikTok operating in the U.S. House passed a stopgap funding bill on Friday, but the Senate failed to pass either Republican or Democratic-backed plans. Deadline to avoid government shutdown is September 30th. Next week, with Senate not scheduled to return to Washington until September 29th. Google U.S. antitrust trial commences today. EU is set to block big tech from new financial data sharing system. Pfizer reportedly nearing a potential $7.3 billion takeover of anti-obesity drug Metsera. I would love to find out how these pharma companies get the names for their drugs. Some of them are very, very difficult to pronounce. So given that it's Monday, I'm going to go over the top tier releases for the week. We had this morning the German manufacturing PMI flash came in relatively strong, 50 versus 49.8. The S&P Global Manufacturing PMI out of Great Britain came in at 47 in line, and the S&P Global Services PMI out of Great Britain came in at 53.5. Fed's Chair Powell and many others are scheduled to talk. I'm sorry, this is for tomorrow. Today we had no 3-star numbers. I'm sorry, this is for tomorrow. Fed's Chair Powell tomorrow at 12:35 Eastern. And then Wednesday we get the IFO, German IFO Business Climate. And then Thursday we get the German Consumer Confidence, durable goods, U.S. durable goods, U.S. GDP growth, pretty important, U.S. existing home sales. And then on Friday we'll wrap it up with the core PCE out of the U.S. This is a very important inflation indicator for the Fed. Core PCE, personal income, personal spending. That's what's on deck for this week. Nothing too dramatic except for Thursday's GDP growth, Q on Q, as well as the core PCE on Friday. And that's what we have. You can see today it's a Fed parade. Fed's Williams, Fed's Musalem, Fed's Barkin, Fed's Hammock, Fed's Moran, the new guy, and so on and so forth. So there's just a lot on the calendar. The S&P overnight. The S&P multi-distribution profile, it's got basically 2 distributions. It has traded in the upper part until the European Open, and we had a sell-off on the European Open. By the way, excuse me, the European Open has been a pretty big trade lately. I mean, a lot of big moves overnight, whether it's for crude or, for energies or for equities. Has been the European Open. The European market opens at 2 a.m. Chicago time, 3 a.m. Eastern time. If you happen to be insomniac and up at that time of the night, you might just want to have a look. Now, if you're being an insomniac and are not sleeping, it's probably not recommended to trade, but it's an interesting time to watch. I like to replay the early morning to see how the structure was formed. Again, the S&P is a multi-distribution profile, which means that there's an active price discovery going on. 124,000 contracts traded now in the December contract. The triple witching's behind us, the roll's behind us. So all of our order flow metrics like the footprint, cumulative delta, our collisions, all that stuff are back to normal, thankfully, until the next roll in March. The inventory is 100% short. We opened and have remained below the prior close. The range is 26 points. There's maybe an issue here. The 252 range mode is not 50 points. It really should be around 25 to 29. The range is in line with the mode. We'll need to fix that on the spreadsheet here. Looking at commodities, again, the action is with commodities. We've got crude coming off pretty strong, falling below the $62 handle. Remember, there's a 35-cent. There was a 35-cent change in premium, so. This is, in the old contract, this would be around $62 right now. And so crude having a fall below 62 is quite significant. And then gold pushing highs again, gold unrelenting and scary. This safety asset has been just on a tear, basically signaling to us how our fiat cash is going out of style. Silver the same. Silver is secondary to gold. It's another store of value in the case of devaluation. Copper has taken a beating lately. If you look at a copper chart, some interesting moves in there. And then Bitcoin and ETH. ETH is off quite a bit. Very interesting on high volume in the futures. And a very wide range, quite a bit of volatility there. These products are volatile, but this is extra volatility. that we're seeing. Let's take a look at the markets. Okay, so I did a TraderBite on Thursday, and we were here. And on Thursday, if you watched the video, I talked about the strong potential of pushing back up, consolidating, and then squeezing to the high. It did not manage to do that on Thursday. But what it did manage to do on Thursday, which made it really interesting, is we left this spike low, this very clear excess low, right at the open. I mean, we essentially moved to the next balance zone. You could see how that that band is separating this high volume node. We moved to this balance. Excuse me. We moved to this balance zone to hit basically the point of control in the area, which was at 66.70 or so, and then just pushed right back up the other way. A nice big squeeze given the sell-off overnight, and then it rested in the middle. The following session, Friday morning, created this triple distribution profile. No, I'm not giving you a sideways finger. Triple distribution profile, and retested the band, but we got into the excess by just a little bit. The excess starts right down here. We got in there by just a little bit, and then we consolidate at DGPs in the overnight session, and then we squeeze up. And so this zone here for Friday's session was quite important, and we pushed through and then climbed to new all-time highs. Friday's push was quite a grind. We ended up leaving single prints here. We left basically weak structure below, and Friday had a double distribution profile with a cutoff right in here. And that's the cutoff that we tested overnight a couple times. We kind of squeezed up there and until the European Open, and then we moved. Where did we move? We moved right back into this zone here, and we're holding. So what is the S&P doing overall from an auction perspective? We made a new all-time high, and we made that high in the last couple of brackets, the last two brackets of the session, M period basically. And we saw, as soon as we hit this new high, we saw sellers come back in and push it back down. Ended up settling at 67.2250, and since then there's been a wall right here, and we are holding below DGPs. We have the point of control right at price with DGPs separated above. So to me, this looks, as it sits right now, it looks weakish, but it had an impulse down, came right back to the full session VWAP, full session mid, and has been steady holding below. So this looks like, okay, this is a pullback for a continuation to at least take out this low, to at least take out the low, but it has not. It has put in a higher low, holding the century figure, and so currently the 6710 right in here, the 6710 is the LIS, line in the sand. Do these acronyms throw you off? Is it kind of crazy to try to keep up with all these fancy sounding words? It's just a way to communicate in shorthand. But 6710. So this morning, what is the plan for the S&P? The S&P, the overall imbalance is to the buy side. The Fed put in a low, the next day put in a higher low. Now we've got one time framing up. The limit to one time framing is the low here, and we are holding above that. So the imbalance is to the buy side. So the overall wins into our sales are pushing to the buy side. But the overnight session is telling us that it's really having a hard time holding on to that prior high territory. And we are off of our prior settle. We're opening in range, so the prior settle stat is in play. It's around 73% historical probability, or 76%, something like that. And it continues to, that stat is in play this morning, and it's holding a higher low. So the question is this morning, will we get into and exceed 67.10? As long as it stays below 67.10, I'm expecting a continuation lower to challenge Friday's low. If it challenges Friday's low and it breaks it, the one-time framing ends, that I'm looking for the quality of a pullback into that 66.96 area, and I'm looking for a continuation down to the next spike low into 66.80, and so on and so on and so forth. If it does not hold the 66.80, then you're looking for the point of control at 66.70, and this takes us into the next spike low, and there are likely to be stop orders under all of these spike lows, these excess lows. So we're looking for, how are they treated? So the overall view is, look, it's intraday, it's leaning to the short side, but all of that can go away at the open. Once the higher time frame, once the money comes in, it might push through that 67.10 quite easily. And if it does, then I'm targeting the overnight high stat at 67.21, which is in that zone against the 67.20 prior high, 67.19 prior high. That becomes a key target from 67.10-ish to 67.20, and then once it gets that done, the prior settle stat comes into play. That 76% historical probability comes into play, and then that leaves us with the excess high that we left on Friday back up to 31.50. There is no way for me to classify these two possibilities because it's a function of how it treats that 67.10 when we first start. So the prevailing winds are to the buy side, but the most immediate information is saying that it's not able to get above and hold VWAP. We have 100% short inventory. We look for that to rebalance. I would not be shocked if we come in, consolidate a little bit, and push higher right off the open. And then I would be gauging pullbacks into the 67.10 or this consolidation zone right here to define risk and look for a pullback to get long, targeting, as I said, 67.20, 67.2250 for the prior settle stat, and then the 67.3150. Monday after options expiration, what is the historical behavior on Monday after options expiration? Historically, it's a choppy day. It's a relatively low volume, low range, choppy day. And here are your relative indications. This is the CT Convergent Trading Relative Indications chart, and you could see that at this moment, the volume and the range compared to this moment, 20 sessions, the average of the last 20 sessions range and volume versus the current moment's range and volume, it is relatively low. It's off by 20% on volume, 22% and 15%, 15% on volume, 22% on range. And we see this kind of kicking in across the NASDAQ, small caps, although the Dow's behaving pretty well. And of course, at this point, the FDAX and Euro stocks will generally be higher because they're in their cash session. We're not. Looking at crude is trading pretty well, pretty good range, pretty good volume. And then the other one is ETH and Bitcoin, trading a lot, trading quite volatile, as I said earlier. So to me, this looks like the kind of morning where you'd want to be patient for at least the first 15, 20 minutes, maybe the entire first bracket of a half hour before kicking in. But that's the idea. The idea is if we take the overnight low and break this band, then we're moving from band to band. Well, we'll probably take a stop at VPOC and then to the next band and so on. Trade level to level to level. If it takes out the 6710, then look for level to level to level the other way. And it's just a coin toss right now which way it might go, because we have conflicting information depending on the time frame, with the prevailing winds being to the buy side. This is crude. So crude, I've talked for weeks and weeks and weeks on end about these two bands here and here. And these two bands have kind of been a channel that has completely frozen the auction in between. So there's been pretty good structure inside. You could see this big push here on the Russian thing, big sell-off, and so on and so on and so forth. We had a band right here before, okay? And then we had a rally from a consolidation, so we added this band. This band somewhere in the middle of the range, right on top of the point of control. This band was basically the mess that was the site or the scene of a mess that we had on Friday. Friday's trading was just a lot of consolidation back and forth. This morning we opened down. We opened right just below settlement, and we pushed right back into the band. We are unable at 63 even, and then sellers come right back in and squeeze us through 62, the 62 handle. So to me, unless crude pops, we have pretty good separation. You know, the profile is very jagged, pretty good price discovery. We have a point of control that's down near the lower end of the range, the lower third of the range. We have prices near the low, and we have our DGPs up high. So to me, the crude trade this morning that I would be looking for is a pullback into 62.20 to 62.40, looking for buyers to weaken or to lift but not get much price. This would create an opportunity to sell into that weak buying strength and look for the continuation for a test of the 61.41, a break of the band, and then to start to push down into the 61 even handle. This is the primary scenario in crude. It ties in with the one-time framing down. So here in crude, we have one-time framing in on the sell side. We are cutting through the balance range. We're on the lower end of the range, so I'm not going to sell in the hole here. I'm not going to sell the low end of the range, but the expectation is it's likely to pull back into, if it's going to pull back, it's likely to pull back into the 62.20, 62.40, and it's just a question of where can I locate a trade with known risk or reasonable risk, and look for the low to be targeted first. We'd want to have risk off completely at the low and let the runners run into 61.40 and then 61.17 and 61 even below that. Okay. It's 8:25. We're 25 minutes in. I'm going to let you go from here. Of course, I invite you to take a moment to subscribe to the channel and to set your alerts. What that does by you participating in this way, I mean, I'm not asking you to pay me for anything. I'm not interested in selling you anything. But if you subscribe and like the video and set alerts, what that does is it allows my channel to show up for other traders who are very serious about being career professional traders instead of entertainment, YouTube, FinTwit, financial entertainment. And it helps others kind of find us and hopefully helps everybody trade in a more sustainable way. Of course, you can always join the discussion by going to Convergent Trading. You can find more info there at convergenttrading.com. If not, I'll catch you on Wednesday at the next video. Okay? To subscribe to the channel directly, go to ft71.com/YouTube, and that'll give you a prompt to subscribe. Subscription is free. Good luck.